Workers at this logistics company in Istanbul are busier than ever. Taha Cargo specializes in shipments to Iraq. Its owner, Taha Amin, says revenues grew by a third in 2017, and he expects even more business in the next 12 months.
We are increasing in exportation from Turkish companies to Iraq, minimum by 30% again. Our companies decided to open new offices in Saudi Arabia, in Qatar, in Dubai, and in Jordan too.
Amin says his expansion plans mirror rising exports from Turkish companies to Asia, Africa, and the Middle East. Demand in traditional markets like Germany is sluggish, so companies from consumer electronics giants to horticulturists are diversifying their markets. This push, along with higher domestic sales, raised Turkey's output beyond expectations in 2017. The economy grew by more than 6%, and this momentum is expected to carry through 2018. The government's spending on infrastructure and doling out $56 billion in cheap loans for businesses were major drivers of growth. And the local currency has lost strength against the US dollar, making exports cheaper for international buyers.
We aim to bring Turkey 15 to 20 spots higher in the ease of doing business rankings. In 2016, global trade stood at $16 trillion. Back in 2008, this tally was $18 trillion. So global trade has fallen. We want to grow our share in it from 0.5% to 1.5% by 2023.
But the growth spurt has come at a price. Fueled partly by low borrowing costs, prices of food and other products are rising. The central bank has increased interest rates in recent weeks, but it remains focused on boosting growth despite double-digit inflation. Over the past few weeks, the International Monetary Fund and the OECD have raised their outlook on the economy. At the same time, ratings agencies Moody's and Fitch have lowered theirs. The lack of consensus suggests the economic outlook is uncertain. What's clear is that Turkey will face many new challenges, markets and opportunities in 2018. Mobin Nasir, TRT World, Istanbul.
For more on this, financial columnist Taha Arvas joins me in the studio. Welcome back to Money Talks and Happy New Year to you, Taha.
Thank you, to you too.
What is your sense of what 2018 has in store for Turkey's economy?
Well, I think Turkey's economy, as always, is connected to the global economy. 2018 will be a very tricky year globally. And as you can see, just recently, the United States Senate passed the tax overhaul, and I think the House has recently passed the other bill. So I think what's going to happen is movements relative to the US dollar and the United States will affect the global environment. And on news of these recent developments, the Turkish lira has strengthened. So I think it will be a good year for Turkey, despite there being general malaise in the world. So we'll see what happens, but I think there are, as was just said in the piece, opportunities for Turkey. So it's possible that it could be a very good year.
Now, as you mentioned, you are very correctly talking about the environment that Turkey operates in, the global environment,
right.
And interest rates overseas in Europe and, well, mainly in the US, perhaps later on in Europe, are going to start going up.
Right.
How is this going to affect Turkey? Is it going to put more pressure on the lira?
I think what's interesting is the interest rates in Turkey actually went up by 25% this year alone. So we've had a huge increase in the interest rates in Turkey. This has allowed a lot of investors looking for returns on investment to invest in Turkey. And I think we may be done with interest rate hikes in Turkey, because not only have the United States Fed and Europeans signaled that while there is a potential for increased rates, it won't be nearly as fast as everyone thought it would be 2 years ago or 3 years ago. So I don't think there's a huge problem in that aspect. And I think borrowing will be at a good rate next year for Turkey.
Interesting. So how have Turkish companies and individuals that you've been speaking to adapted to this very rapidly changing environment?
Right. Turkey is a very interesting neighborhood. It's a very interesting country and neighborhood to do business in. This brings a lot of opportunities as well as risks and a lot of interesting ways at looking at business. So a lot of people have been saying that while 2017 was a tricky year, it was obviously much better than 2016, and we've weathered the storm. So the Turkish lira is back to where it was in January. The stock market's up over 45% and over 40% in dollar-denominated terms. So people are back in Turkey, and it looks like businesses and individuals have weathered the storms and are looking forward to a productive year next year.
So you think that a lot of companies and individuals have actually been able to leverage off of those gains in the equities market as well?
I think so, because the investors investing in Turkey are mostly foreign companies, and they've seen opportunities, and the domestic market has also joined with them, and balance sheets have become much more robust in the last year, and which is great news for Turkish companies and individuals.
Okay, we're very quickly and finally, Taha,
yes.
Turkish exporters did get the boost, as we said, from the weak lira in 2017. But do you see that effect continuing into 2018 vis-à-vis exporters in particular?
I think at some point the weak lira the crutch that is the weak lira will have to be kind of given up by companies. And they've begun, huge investments were made in 2017 in technology and efficiencies, and that will play a huge part. The lira is still weak against the dollar, so that's great news for exporters. But I don't think it'll be as big a factor as the investments in technology and machinery have been in 2017.
Taha Arvas, financial columnist, thank you ever so much.
Thank you.